Hey guys, welcome back to the Crypto Explorer channel. In today's video, we're going to talk about providing liquidity with full range. That is something you might want to consider if you are willing to provide liquidity to a Bitcoin pool. Why? Well, because the thing when providing liquidity in concentrated liquidity pools is that you're basically putting a buying and selling order. In case you're completely new to this, let me sum up things real fast. You'll have two ranges, an upper range and a down range. So let's say my up range on this Bitcoin liquidity pool would be 107K, and let's say my lower range or my downside range would be at 79 or 80K. When the price of Bitcoin trades in between the ranges, you earn fees, both in the shape of Bitcoin and the other asset in the pool. Now this is BTCB, which is a tokenized version of Bitcoin on the Binance Smart Chain. It's not native Bitcoin, and the same goes for every other tokenized version that you'll find here on any of these pools that I set up. This is something I explained you how to do in my previous video by using DEX Screener, finding these pools, tracking them on your watch list, and you of course can apply this to whatever token, whatever liquidity pool you want. But the point here is, whenever price of Bitcoin reaches your upper range, your whole position, your whole deposit now is sold for USDT. If the price goes down and it meets or even crosses our downside, it will sell everything to BTCB. So you'll be basically essentially buying the dip. That's what I want you to understand. You are essentially putting buying and selling orders. It's as if you are trading, although an automated way of trading. Now let's say Bitcoin skyrockets and it goes to 200K, meaning that you potentially will incur an impermanent loss. Yeah, you can also have impermanent loss in the case of price going up, because what you make up in fees doesn't really make up for the price that Bitcoin just suddenly 2x'd, okay? So in that case, it's going to be a bummer. Now you're stuck, so to say, because you're not really stuck, but your position did effectively sell everything, all your Bitcoin holdings at 107K, and now you're holding 100% USDT. You can withdraw whenever you want from the pool, of course. There's no locking periods, none of that. But you might be left wondering, okay, I should have, instead of providing liquidity, just keep on holding the assets in my wallet, and then I would be up to X. Now there's a way for you to counter that, and that's by providing liquidity with full spectrum of ranges. Of course, that will drastically diminish your rewards in the shape of fees. That's something you need to understand when providing liquidity to concentrated pools. The tighter your range is, the more fees you will get. But also, you're going to be extremely exposed to market volatility, and likely you'll go out of range really often. I don't advise you to do that unless you have the time to manage the position and that's something you enjoy doing, then yeah, go for it. Usually I don't touch my positions even if they go out of range for at least a couple of days. If I think I need to adjust it, I adjust, but usually I don't even think about adjusting before 48 hours, 2 days have passed since the price went out of my chosen range, okay? So this is on PancakeSwap. We're using the example of BTCB, but you can apply this to every pool. So let's, for example, go here on Solana. I believe this one is on Orca, yeah. So let me show you how you can do that on Orca. So let's jump in. All right, so we're here on Orca. There's a couple of very interesting pools that we already added to the list, like I showed you. Wrapped Bitcoin paired with Solana, and also Coinbase CBBTC, tokenized version of Bitcoin from issued by Coinbase, right? Paired with Solana as well. Right now, this one is performing the best, and you can sort out the yield, the expected, the projected yield for whatever amount of time you wish. This for 365 days. It might be misleading just because of the nature, the volatility of crypto markets. Based on the last performance for the past 24 hours, if that performance keeps up, you would be expecting after one whole year your position to have grown 148% or 117%. And that would be awesome. I mean, we're talking about cheap assets here. So whenever you select a pool, you can go full range. And that's exactly the first thing that it shows. Position range here, full. You just need to deposit. And you see the deposit ratio here. It's going to be 50-50. So if you deposit $1,000, you'll have $500 worth of wrapped Bitcoin and $500 worth of Solana. But you will generate fees regardless of Bitcoin's price. You don't have to worry about a thing. The only thing you need to worry is when do you want to claim your fees, your rewards, okay? Now you see the estimated yield here for the next 365 days. Now it's 3.2%. And the reason why that is, it's because of course it's going to be juicier as we saw before. If you go back here on the yield to TVL, this is much juicier. I mean, we're talking triple digits. So I believe this is an average for what every liquidity provider is getting. But if you go full range, you'll see the rewards are much lower. And this yield does still consider the past performance for the last 24 hours. Do have that in mind. The thing is, the range here is full, it's maximum, it's up to infinity, so that's why you get much lower rewards. The thing is, if Bitcoin 2x's in price, you wouldn't be selling your position altogether for Solana in this case. Or if you would be looking to a pool of Bitcoin paired with a stablecoin, you would not be selling the entirety of your Bitcoin position for the stablecoin, okay? You can still suffer from impermanent loss, but you can see here the composition of the pool. So we have 43 pooled Bitcoin and almost 22,000 pooled Solana. And this is the pool's balance, which will also change depending if Solana price is going up or down, if Bitcoin price is going up or down. The good thing about having two blue chip assets in the pool is that usually they will move together, and I'll show you that. This is the correlations matrix on DeFi Llama. We are going to compare how the price of Bitcoin and Solana move through time. So let me add Solana here to the list. Actually, it's already showing here, so let me click it. So for the past year, right, this is the metric we have set in. So for the past year, Solana and Bitcoin have a correlation score of 0.69, which is extremely good. The maximum is 1. For the past month, we have 0.93, so this is awesome. It means that had we have deposited into the pool for the past month, the distribution of our deposit wouldn't have changed all that much, virtually nothing. And for the past 7 days, it's 0.94%. Really good. I like to look in the long run because when I'm looking at this stuff, I tend to provide liquidity for the long run to blue chip assets pools. So 0.69%, it's still a really great score. I would not shy away from that. Our initial deposit would have changed a little bit, but not all that much. And chances are, and by chances I'm fairly sure that for the past year, you would have generated more in fees that would make up for a potential impermanent loss that you could have suffered. Again, the closer this number is to 1, the less likely it would be that you would suffer impermanent loss. And you can also see that happens with BNB. So if you go for PancakeSwap's pools, BNB paired with BTCB pool, the same exact scenario would happen. Even better because the score here is even higher. Interestingly enough, Ethereum wasn't the case. So had you been providing liquidity to a pool made from Bitcoin and Ethereum, unless this pool generated a lot more in fees than a BNB pool paired with Bitcoin or a Solana pool paired with Bitcoin, you probably would see that these couple pools performed much better. So the only thing that could make this pool more worth it is that it would have been generated more fees. And it could be the case, but especially on Solana's case, I don't think that would be the matter because these pools on Solana tend to do quite well. So let's go back here on our watch list. We see there's a lot of volume on these pools. There's a lot of makers. Actually, these are the pools with the most makers, and also the transactions are on top. If we sort this out by transactions, you see the top 3 shows us these 2 Solana pools. And there's even this third one. And this third one would be the perfect pool for you to avoid impermanent loss altogether. This is again on Orca. So this could be also an option. If you want to avoid impermanent loss at all costs, this is the type of pool you want to deposit on. In any case, guys, this is what I wanted to share with you. You can go full range, not only on Orca, but also on PancakeSwap, for example. And if you do that, you'll earn much lower yields, yes. But if Bitcoin price just skyrockets, you don't have to worry about a thing. You'll earn fees, completely passive. You just need to come here, harvest whenever you want. And if Bitcoin price goes to 200, $500,000, $1 million, you essentially didn't need to sell your whole position for the other token in the pool, because this is just made to beat full range. I hope this was clear enough, guys. If you have any questions, let me know in the comment section. If you want to know more about yield farming, get some crypto passive income, I highly recommend you to check out the Underdog investor group. It's a paid community, but if you use my referral link, you'll get 20% off on your first month. That being said, guys, if you have any questions, let me know in the comments. Like and subscribe for more of this type of content. I'm going to wrap this one up. Keep exploring crypto, take care, and I'll see you on the next one.